Welcome, everyone. This is Sam Price, and we're here on another episode of Probate Notes. And I have with us here a CPA who's going to give us a lot more insights into how we do accountings in our probate matters. And so I'd like to welcome Marcia Campbell. Hi there, Marcia. How are you today?
I'm doing well. Thank you for having me, Sam.
Thank you so much for being on the podcast. I just wanted to get started understanding a little bit about you. Why don't you tell me a bit about where you're from and your background?
Okay, well, I grew up in Buffalo, New York, and so I was used to cold weather, and now I'm getting used to hot weather.
Yeah.
But I grew up there. I went on vacation to Puerto Rico and met my future husband. He was in the Navy on a submarine, and we were walking down the street, and he asked me to go to a disco with him.
Hey,
So we did that, and 4 months later, we were married. So, we had 3 kids back there, but he always wanted to come back to California, so we came back. Here we are, but after a few years of raising kids, I wanted the mental stimulation of doing something extra. So I went back to school when my kids went to school, became a CPA. And then quickly got bored with just doing accountings because they were the repetitive thing, the same thing over and over again. Way back in probably 20 years ago, there was a big scandal in Riverside where a conservator stole a lot of money from their conservatees. Most of them were elderly, not knowing what was going on. And at that point, I decided I wanted to work with seniors and help protect them and their finances. So I started doing that for a long period of time. I enjoyed the heck out of it. Uh, but then I moved into doing court accountings because that's where I was with the seniors. And right now I'm working very little with seniors and doing much more work with the courts and with the counties.
can we please talk a little bit about um, court accounting, specifically in a probate decedent's estate matter? What are some of the things that you're going to need in order to create an accounting?
Well, normally I ask for the inventory and appraisal. Usually the attorney will go ahead and take care of that, and we'll go to a probate appraiser to give them all of the assets. The appraiser, especially with the houses and cars and stuff, will usually come up with a value that's going to be recorded on the accounting. So we start from there. Um, things like personal items is basically a guess, but things like investment accounts, the probate appraiser will take it right from the statements. So first is finding out about those assets and finding out the values and taking the numbers from the inventory and appraisal. If you don't take it from there, if you decide that your numbers are better, you're going to have all kinds of problems in the courtroom. So we start there, and then we start looking at other things like what kind of receipts are there going to be? Is there pension money that came in, Social Security that probably stopped, but there may have been a payment that came in and then it went back out. The purpose of the accounting is to show the court how things balanced. So you have to keep track of everything that came in, even if it went back out again, because there's no telling if the court, usually it's the probate attorney, is going to look at the bank statements and wonder why is this number on the bank statement and why is it not on the accounting? So we want to make sure all of the numbers are there. That also goes along with disbursements. What kind of expenses were paid. We try to make sure that we put as much information on the transactions so that the court and the probate attorney is not going to ask questions. So we want to know, have as much transparency in the accounting as we can. So there's no questions asked. The more we give the court to make them feel comfortable with it, the better off it'll be to get through the system.
So the word receipt has a meaning in an account, but it's not the normal use of the word receipt or language. Can you
Right.
tell us a little bit about what a receipt is?
Before the court, a receipt is money coming in that was received, which is different than a piece of paper as a receipt. So I have clients call me all the time who want to bring in boxes of receipts. And
Yeah.
it's like, no, no, no. It's money coming into the estate.
Yeah. So an example might be something like a dividend payment, or it might be interest on a bank account.
Right. Right.
What are maybe some other examples of what might be a receipt?
Sometimes it's like a pension amount that might still be coming in. Most of those type of things stop, except for like the investments where there's, dividends that come in. You might have capital gains that come in on, things that are sold during the period that you're working with. So if you have stocks that are sold, or you'll have capital, or you'll have gains or losses that appear on different schedules. Um, but then that's another thing the court wants to know: what happened to the assets in between the beginning and the end.
So if we have a receipt, that sounds to me like income, like it might be an item of income,
Correct.
but that might be different from what you're explaining as a gain on a sale. So if we had a car and we sell the car at more than what it appraised for, what would that be listed as on an account?
It would be, if it's sold for more, it would be on a or like a gain schedule, and it would show the numbers that are on the original accounting are called carry values. So for the car, it would be the carry value of the car, say it was $2,000. And if they sold for 3,000, you'd have $1,000 gain. So the court looks at those carry values to figure out if there's gains or losses. Now, the $1,000 that came in would not be considered a receipt and go on the Schedule A because it's a different kind of money coming in. And that confuses people all of the time. So it does show up. And one of the things that I do, the court always wants to know if the cash from the beginning and the cash ending, if that balances. And the court probate attorneys will take the cash and add the receipts and subtract the disbursements to come up with the ending balance. But they won't take into consideration the $1,000 that came in, or the $3,000 that came in for the cash for the property that was sold. And that's part of the reason that we always add in a cash reconciliation on the accounting, so we can make sure that the probate attorneys are picking up all of the money.
Another time when money can be going out of an estate is when there is a distribution. And there's similar words, distribution and disbursement. But what is the difference between a distribution and a disbursement?
Disbursement um, is money going out to pay something for the estate. So we just talked about, property taxes, gardening, pool services, that kind of thing, something to take care of the property. A distribution is money going out to the beneficiaries. In an estate, that doesn't normally happen because you need court approval to do those distributions. However, if somebody is alive and the payments are being paid afterwards. In some cases, that could be a distribution to the person who died. And in some cases, depending on the circumstances, it could be a disbursement.
Yeah.
So,
And so again, those type of distributions, we would want to have some type of information or explanation about how and why perhaps there was a petition for a preliminary distribution and this was allowed by the court.
right.
Sometimes it could be on a notice of proposed action procedure. If we have a will that gives a specific gift, there are certain specific gifts that can be given out, and with a notice of proposed action procedure.